Joe, can you take me through what's troubling investors about China at the moment?
One concern would be around the empty apartments. But we've got to look at the bigger picture. So over the last 20 years, about 400 million people in China has migrated from the countryside into the cities. That's about 20 million people a year. So over the years, the apartment market has been quite undersupplied actually. But today, clearly, supply has caught up, and in some cases more than caught up. I guess another concern would be around the shadow bank in China. And the thing is, the Chinese shadow bank is actually small by global standards. The products are relatively simple, so the risks are actually quite quantifiable. The Chinese government, which actually doesn't have a lot of debt, is in a very strong position to deal with the problem if needed.
So is it true that we're seeing an economic slowdown?
Yeah, sure. So China is slowing down, but despite that, China is still growing at a faster pace than most other countries. The people in China, they're still seeing the wages growing very nicely, and also the country is still making a current account surplus of more than $500 billion a year. So that's about $1.5 billion a day. What is true, though, is that the construction sector is going to slow. Just simply because it's growing to such a big size already. So it may not be so good for the commodity producers. And that's why the country is reorienting towards consumption. And here reforms are crucial.
So can you take me through what the reforms mean for investors?
Sure. The reforms happening in China represents a monumental undertaking to try to improve the way things are done across this vast country of more than 1 billion people. Where they want to get to is quite clear. They want a stable society, a stable economy with sustainable growth, and also a fair society where people can share in the spoils of economic progress. So with reform, we expect hundreds of millions of people will move into the middle class, and the consumption habits will change drastically. We're invested in businesses that can take advantage of this big transformation. So these are businesses in areas of healthcare, car, jewelry retailing, insurance, and the internet sectors. We expect these businesses will grow bigger in 5 years' time compared to where they are today.
Sounds exciting. Thanks, Joe.
Thank you.